Welcome to Smart Stock Watch. Today is October 24th, 2024, and we're diving into Capital One's latest earnings report for the third quarter of 2024. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Capital One has just released their Q3 earnings, and there's a lot to unpack, from their net income figures to strategic initiatives like the Discover acquisition.
Revenue and profitability overview. Let's start with the top line. Capital One reported a net income of $1.8 billion for the third quarter of 2024, translating to $4.41 per share. This is a significant increase from the previous quarter. John, can you shed some light on this?
Absolutely. The net income of $1.8 billion is indeed impressive, especially when compared to the $597 million from the second quarter. The earnings per share also saw a boost, with adjusted EPS at 4.51 cents. This growth is driven by a 5% increase in total net revenue, reaching $10 billion, primarily from their domestic card and auto businesses.
Operational efficiencies and future outlook. Despite the revenue growth, Capital One's non-interest expenses also rose by 7% to $5.3 billion. How does this impact their operational efficiency, John?
The increase in non-interest expenses is notable, with marketing and operating expenses contributing to this rise. However, Capital One has managed to maintain an efficiency ratio of 53.7%, with an adjusted ratio of 52.53%. Their net interest margin also improved to 7.11%, indicating effective cost management. Looking ahead, the ongoing Discover acquisition is a key focus, with regulatory approvals in progress.
Balance sheet and capital position. Turning to the balance sheet, Capital One's Common Equity Tier 1 capital ratio stands at 13.6%. What does this tell us about their capital position?
The CET1 ratio of 13.6% reflects a strong capital position, which is crucial for absorbing potential losses and supporting growth. Loans held for investment increased by $2.1 billion, and deposits rose by $2.2 billion, indicating healthy growth in their core banking operations. The interest-bearing deposits rate also saw a slight increase to 3.63%.
CEO insights and strategic initiatives. CEO Richard D. Fairbank highlighted the growth in domestic card and auto businesses. How does this align with Capital One's strategic initiatives?
Richard Fairbank emphasized the strong performance in these segments, which aligns with their focus on expanding consumer credit offerings. The stable consumer credit results are a testament to their effective risk management. Additionally, the Discover acquisition remains a strategic priority, with efforts concentrated on securing regulatory approval and planning for integration.
Key takeaways. In summary, Capital One has delivered a strong performance in Q3 2024, with significant net income growth and strategic focus on key business areas. John, any final thoughts on their investment prospects?
Capital One's robust financial performance and strategic initiatives position them well for future growth. Their strong capital position and focus on consumer credit are promising for investors. However, the success of the Discover acquisition will be crucial in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Capital One's performance in the comments below.